So, in order for you to actually invest in cryptocurrencies, the first thing that you have to know, you have to understand, the first non-negotiable is understanding blockchain as a technology. Okay? There are so many definitions of blockchain. Okay? Depending on how people want to believe the term blockchain or the technology called blockchain, and it's totally okay. But what we have to understand is that blockchain is just a foundational technology which has enabled a new way of creating projects, digital projects. Blockchain is a technology, it's an innovation that has been brought about to allow a different deployment of ideas. Okay? So it means that blockchain should never be a stamp of legitimacy. Like, this project is built on blockchain, it's going to make you millions. No, 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 no. That's not the truth. But the truth is, blockchain was brought about after people seeing different things, and they noted that the best solution of these problems that we are seeing is having a public blockchain, which is going to be decentralized, it's going to be immutable, and it's going to be transparent. That's the main theme. But blockchain as a technology will never change how a business operates. Meaning that if a business is built on blockchain, it will never be in a period where you are on the losing side. That's not true. So it means that with blockchain, it does not change, never changes the business logic. Blockchain allows deployment of ideas in a specific manner. And that manner is that any project that is built on blockchain, it inherits transparency, eh, immutability, and decentralization. So if you look at these three pillars of blockchain, when you look at these three pillars of blockchain, you don't see anything that has to do with the business. Nothing. There's nothing about where you'll get customers. There's nothing about what could expose you to losses. But the only thing that you see from these three pillars of blockchain, let me write this for the sake of everyone, the three pillars of blockchain. It shows nothing about the business logic. So blockchain is just the foundation, the fundamental technology. And once you understand that blockchain is nothing but a fundamental technology, then when you are analyzing any project that is built on a blockchain, then you are obviously going to be looking at the business logic. So that's, in a nutshell, the theme or the idea that you need to have about blockchain. You don't need to understand about how it works, about Markov trees, about hashing, about blocks, about forks. You only need to understand blockchain as the fundamental technology, because for most of us, none of us is going to be actually interacting with those uh, low-level systems. We just need to know blockchain as an implementation technology. Now, one of the first implementations of this technology is something called crypto. Okay, very famous crypto. And basically, crypto are just digital or programmable units that are built on blockchain. So that's the definition that you should have or you should understand, meaning that crypto is nothing but a programmable unit built on blockchain. Blockchain. And not two cryptocurrencies cannot be the same, or not all cryptocurrencies are the same. Since crypto is a programmable unit, it means that crypto will behave, okay? Behave depending on its purpose. 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 Meaning that cryptocurrencies, they always behave depending on what they were programmed to be serving or what particular service can you access with this cryptocurrency or with this crypto in general. So a crypto, it can be a currency, okay? We have heard of USDT, we have heard of DAI and other crypto that serve the purpose of being a currency. Yes, it's a crypto, but people prefer to use this crypto for transacting because if you have one USDT, it's equal to $1. It doesn't fluctuate. So it's ideal if you want to send money across the border and you need to buy something that is going to maybe take 1 or 2 days delay. For example, if you send Bitcoin today to China to buy a shipment, and once the Bitcoin gets there, it lowers its, the price goes down, then you are exposed that you need to send more Bitcoin in order to cover that price. But if you send perhaps USDT, then it's a different scenario. So there are cryptos that are programmed to serve the purpose of being a currency. Another thing, we have crypto that is programmed to be a governance token. Governance token. Meaning that this crypto will be required or will be used when you are required to do voting in a particular ecosystem. For example, there's a decision to be made here. So for you to participate in the decision making, you need to own the crypto. An example of this is Arbitrum. We have seen Cake serving the same purpose. We have seen Uni serving the same purpose. So it's a coin that is mainly programmed or mainly needed when you want to vote, then this will act as your voting ID. We can have what we call let's call them utility, which actually show ownership to a project. Okay, so there are cryptos that when you have them, they give you ownership to a project, meaning that when the project makes a profit, you get a share of that profit. When a project grows, you participate or you are part of that growth. So you have to know, when you hear about blockchain, you know that it's just a fundamental system, a foundational technology, which people can use it to develop different ideas. Crypto is one of the application of blockchain, which a unit is programmed within a blockchain to serve a specific purpose. So it can be a currency, it can be a governance token, it can be a utility token, it can be a metaverse token, it can serve so many purposes. If we are together to that point, please go to your box chat and type 111. If we are together to that point, let's go to the box chat. Go to the box chat and type 111 so that I know we are together to this point. Okay, that's good. That's good. Go to the box chat and type 111 if we are together to that point. Now, one thing that you have to know is the monetary value, or where the money is, especially in this crypto, in the blockchain ecosystem, the money is with the crypto. Meaning that if you want to make money you have to buy the crypto. Okay. And we have done so many sessions trying to explain to people, like, what should you be looking at when you want to buy a specific cryptocurrency? So if you have your money right now and you want to make investment in the blockchain, you want to buy cryptocurrencies. So what should you be looking at? That's a very, very important question that we have done so many sessions to try and educate people. But the reality is, not two people. I mean, two people cannot have the same ideology. You will do your level best, and we have done our level best to try and educate people. Like, when you want to buy crypto, go through 1, 2, 3, 4, 5, 6. But still, there has been divergence because most people don't understand their identity when it comes to investing in cryptos, investing in crypto. The identity in crypto investment. And for someone this is their first time in our Zoom sessions, then you are very, very lucky because this is something that more than half, not even half, more than 70% of people that are coming into the industry are suffering from. Like, they don't know, regardless of whether they have a strategy or not, but they don't know what suits or what works for them. They don't know what works for them. And that can be a very big problem, especially if you are trying to implement something that does not work for you. Okay? I will sit here and tell you the only thing you need to do in crypto is to stake. You don't need to think about trading. You don't need to think about other opportunities that are out there. I will tell you, just stake. Why would I tell you just stake? Because staking is a thing that works for me, and it might not work for you. It might work for me, but it might not work for you. And now, if you're a person who, like, you believe charity, okay, I've seen you for a while, I've been listening to your sessions, I've been watching your videos, and I think what you're saying is right. And you come into staking, and after a while, you're like, yes, I trust charity, but the results that I want is not what I'm getting. Now, I have prepared some few questions that we are going to go through together, slowly, step by step, so that we can see, like, I had them somewhere on a document here. We're going to go through those sessions, those questions together, one by one. And I want you to make sure that you note down these questions so that when you are seated alone, you can ask yourself these questions. And I believe for those people who have been in our sessions, it's going to be an eye-opener. Like, why do people struggle a lot while we have already made a path for them? Like, this is the path, but why are people still struggling? So, we're going to start on the first and the most basic question. It says, what made you attracted to cryptocurrencies? Or what made you like or want to invest, okay, in crypto? This is the first question. And this is the basic question that is going to start to show your identity. Because someone can tell you, I'm attracted to cryptocurrencies because I have heard that you can make a lot of money with it. And I want to also start making a lot of money with it. And that is totally okay. Someone else can say, okay, I have heard about cryptocurrencies. I heard about a person who bought Bitcoin back in 2000 and something, maybe perhaps 2015, and now their net worth has gone up several amount. And I want to find a way where I can invest in assets in this crypto so that in the next 5 to 10 years, I will make some profit. So those are two people who all want to invest in cryptocurrencies. Someone wants to make fast money, the other doesn't want to make. They are focused more on the long term. So, meaning that if those two people come to me, okay, I have the first person and the second person, and they ask me the same question, okay, I want to invest in cryptocurrencies. What do you advise me to do? Okay. So, the person who was interested in crypto because they've heard of these fast gains is not going to listen to me. Not because what I'm saying is not right, but it's because it does not align with the identity that they have. So that's the first question. What made you interested in crypto? So when you're seated on your own, you have to answer that question. What made me interested in cryptocurrencies? The second question, what outcome, okay, or what result matters to you the most? Hmm? What result, okay, matters to you the most? Do you want fast gains or do you want to build something with long-term returns? Fast gains, long-term returns. Another question that will accompany now this one is, what is your investment time frame? It's just a series of questions you have to ask yourself. What is your time frame? How long are you willing to wait for those profits? How long? Is it going to be a month? Is it going to be a year? Is it going to be 10 years? How long are you willing to wait? And while we are stuck on that point of the time frame, I want to add a note here for those who are seeing on Zoom and for those who are also listening on TikTok, is that in most cases, you are always going to be biased based on your identity. Okay? You will listen to stories that align with your identity. For example, if you're a person who is chasing high gains, you'll be more interested in listening to stories where people have been making money. Okay, I have had a friend of mine, he invested a few dollars, maybe $100, and within 1 month, they made $1,000. If you're invested or you're interested in this long-term perspective, okay, then the stories that you're going to hear are going to be, "Ah, have you heard about this coin? Yeah, I've forgotten about it. Wow, then it did wonders." That's what is going to happen. So, for example, for people who are long-term holders, they'll tell you stories like Monero, like Zcash, coins that had been dormant for years, and within the last 2 years, they outperformed almost all top 100 coins in terms of returns. So it means that you have to know. That's something that you also have to clear. The fourth questions, okay? The fourth question, a very important question. To you, what will matter the most? Okay? Question 4, which will matter the most? Is it seeing your assets grow over time? Or is it catching opportunities? That's the fourth question. So, are you the type of person that will buy crypto and forget about it? Track it on regular basis, eh? You track it on regular basis. Or are you going to be a person who's like going to be digging? Like, I know this platform, for example, we have something called Binance Alpha. Okay. We have something called Binance Alpha, where Binance lists coins before they come around into the exchange. So are you the kind of person who is going to dig into Binance Alpha, identify coins that might get a listing, and buy them before they come into Binance? Or are you going to be a person who is going to evaluate a project and let it ride for a long time? That's another question that you have to ask yourself. The fifth question, okay? A very important question. What will you do if your portfolio goes down by perhaps 40 or 50%? What will you do if your portfolio goes down by, let's say, let's be moderate and just say 50%, 40%? What will you do? Will you panic and sell? Or are you going to be patient? Questions that you have to ask yourself. You invested, let's say, $10,000, okay? And you did very good selection of the projects. You selected a good project, and you're like, I think this in the next 10 years is going to give me money. Now, what goes through your mind when that portfolio goes down by 40%? So when you check the tracker that you use, you had 10,000. After a while, perhaps 2 to 3 months, 5 months, 6 months, 1 year, you only have 6,000 in your account. What do you do? Now, if you are together to that point, please, let's go to the box chat and type 222. If we are together to that point, let's go to the box chat and type 222. Okay, that's good. That's good. That's good. And for those who are also with us on TikTok, that's good to see that you're typing. Now, today we're just going to go through questions. Now, a very, very important question. Question number 6, right? This, question number 6. A very, very simple question. How much do you look at the price of the assets that you have? Or how much or how many times do you look at the portfolio? Portfolio. How many times? Do you do it every day? Do you do it every week, every month, once in 6 months? Now, what will that show you? It will show you generally, if you like to look at your portfolio many times, it is highly unlikely of you to be a long-term investor. That's the math. But it doesn't mean that if you check your charts daily, then you are not a long-term investor. I think you see the point. Like, how many times do you look at that portfolio that you have? Okay, you go to, for example, right now we have trackers like CoinMarketCap or CoinGecko. How many times do you go and look at how much assets you have, how much have they appreciated? Because I remember Warren Buffett was once interviewed, and they said, I check it a few times, not every day, not every week, perhaps once a month or a couple of times like that. So that actually shows you like how many times do you look at your portfolio? Another questions now. We're going now to the most important questions now. This is like the shift in mentality. Question number 7. It asks you, okay? How long do you expect to hold the assets you have? Okay? How long you expect to hold your assets? Your assets. How long? Is it a day? Is it a week? Is it a month? Is it years? Because this is very important. I'll give a practical example of myself. Okay? I have a brother of mine, and he's also in this industry. And they they have a group of them where they do their own research. And there was a period of time when we were communicating a lot, exchanging ideas a lot. And he was giving me some ideas of coins to invest in. And I actually never made money on any of his suggestions. Like, I personally never made money on any of his suggestions. And the reason is not because uh, those coins were bad, obviously. You can say they were bad, but I will talk to him like, yo, I'm still holding this coin. And he was like, hey, you're still holding the coin. I sold it back 2 weeks ago. And I was like, hey, I haven't even held the coin for a month. You expect me to hold the coin for 2 weeks? So I was losing money while he was making money. And that stuck with me for a very long period of time. I was like, is he giving me wrong suggestions? But he's making money. Why was he making money? Because what he did worked for him. Like, he could track a coin, he could track news. Like, he knows that this coin is going to have unlock in the next 2 weeks. So I have to sell before the unlocks. Me, on the other hand, once I buy a coin, I forget about it. I'm willing to wait for 2, 3, 10 years. For me, it's okay. So it means for him, it worked because he was not holding them for a long time. For me, it failed because there were coins that you were supposed to hold them for a short period of time, but I was coming in with my mentality of, okay, I buy good coins. Since he told me it's a good coin, then I'm going to hold it for a long time. I never made money. Not because the coins I was given were bad, technically, but for how I do my investment, for how I have adopted investing in cryptocurrencies, my identity did not work for that. And that's why you'll see so many people, okay? So many people are losing money on meme coins, not because it doesn't work, but it's because it's something that does not align with the identity that they have, the mindset that they have. Okay? Question number 8. Question number 8. Before entering an investment or before investing, what influences your decision before investing? Okay? So here we're going to have some pointers, okay? Like, what actually makes you or influences you to make a decision? Do you do your own research? Is it research? Huh? Is it peer influence? Like, my friend has been making a lot of money, let me get in, okay? Or is it gut feeling? Yeah? Like when I say gut feeling, it's like you you have been in the industry for a while and you look at a coin, you're like, this coin is going to do wonders. I don't know why, but it's going to do wonders. Okay? So what actually influences your decision making? Do you depend on other people to make that decision for you? Or do you make your own decisions? That's very, very important. Because if you're depending on other people, then you're always going to be a person who blames people. You have to make sure that you are in a position of when it comes to crypto investing, you are able to make your own decisions. So you might be influenced by your friends, like this project is good, so buy the coin, but you have to do your own research. So it means that if you're in a position where the influence comes from research, then most of the times, even if things don't go the way you planned, you will know where you went wrong. You can improve from that. Okay? You can improve from that. Another question, a very important question. Okay? And it's going to be the last question for this session today. When things don't go your way, who do you blame? Question number 9. When things don't go your way, who do you blame? This is not the last question, but it's going to be the last one for this session because I always joke with people and who ask me if whether I trade or not. And I tell them, currently I don't trade, but I will come to trading. And even if I one day become a trader, I will never teach people to trade because when traders lose money, they always blame their mentors while it was their own fault. Like someone over leveraged, someone went crazy with emotions and did a mistake. But they will blame their mentor like this mentor did not teach me right. So even when it comes to investing, you have to analyze and listen to yourself like, who do I blame when things don't go my way? Like, I bought this coin, I lost money. I bought another coin, I lost money. I changed mentors, told me to buy this coin, lost money. Where does the blame go? And this last question will put you in a position where you know if you are blaming someone else for your misfortune, know that investing in crypto is not for you. But if you analyze something and you're like, okay, I lost money. I invested in a scam. It's okay. It was my problem for not doing the proper research. It was my fault for trusting that person. Don't blame the other person. That other person doesn't even care. They were only there for the commissions. If we are together now to that point, please, let's go to the box chat and type 333. If we are together to that point, let's go to the box chat and type 333. And now with that, okay, with that being cleared, meaning that you have to identify or you have to find an identity that works for you. I would love, in a very short brief, to introduce to you something called staking. And not only staking, but staking with Encryptus wallet. Staking in Encryptus wallet will only work for you, first of all, if you are a long-term believer, willing to build. Because how staking works is you buy a cryptocurrency, you buy assets, and lock them for a while. And you will be getting, of course, some rewards in return. But how staking works, you buy assets, and those assets are usually locked, meaning that you will lose access to what you bought, but it gives you an opportunity to earn a reward. So with Encryptus right now, there are many products. And if you're a long-term investor, I would advise you to also do staking, because as you are waiting for prices to increase, you get rewarded. That is something which is very good. That's why I always encourage all long-term investors, like, make sure that you stake your assets. Even if you're holding Bitcoin, find a way around so that you earn a reward from you just waiting. Because with Bitcoin, you can do that. With Ethereum, you can do that. Now with Ink, with Encryptus Wallet, you can also do that. Meaning that as you are waiting for prices to go in your direction or in your favor, you are making a profit. Now with Encryptus, with different products, I'm going to show you the simulator shortly, is that you can earn up to 60% of assets, of staked assets per year, which translates to almost 5% per month. Okay? Depending now on which asset you have staked, how long have you locked your assets, that depends. Okay? But one thing to clarify before we go to the simulator, and for me to allow some questions, is that if you're locking your assets, it means that the biggest exposure that you have, they call it the risk, or they call it the risk of this business, is that there is price fluctuation, which introduces impermanent losses. Introduces impermanent losses. Impermanent losses is a funny, or it's a professional way of saying that you only get a loss if you sell your assets. That's it. So it means that you can buy your assets, and when they're locked, you get rewarded, but you are exposed that if the price fluctuates, then the assets that you have, they fluctuate. That's why it's very important for you to analyze these crypto projects before you even do staking. Even though they claim that you're going to get rewarded, but you have to make sure that you understand what you're investing into. Know that staking is long-term investment. Staking only works long-term, not short-term. And if that is something that aligns with you, then it's something worth exploring. Now, I want to share with you the simulator. Where is it? Okay. Simulator. Yes. Just a moment. Let me share with you. Mm, okay. I hope you can see my screen. I'm sharing with you the simulator. Yeah. So if you go to www.encryptus.com and you go to resources, we have the staking calculator. It's within the website, and you can use this simulator to see how much you can make. You can use this simulator. So it's www.encryptus.com. Let me do this for the sake of people who are with us on TikTok so that they can see. So this is the staking calculator. And as you can see, this is the currency you use to simulate. There are different options here. Let me do this. There are different options here, Tanzanian shillings, we have the Swiss franc, and so many currencies. And this is the amount that you're looking forward to invest. Perhaps you're looking forward to invest $1,000 in what product? Then it shows you. For example, if it's $1,000 in cake, it will show you how many cakes you'll get here, as you can see. But for our case, it's ink. So you can see the profits. Like if you decide to buy and stake for 36 months, then you're going to make about 0.23% daily of the assets you have. But your assets are going to be locked for 36 months. So if you have $1,000, you'll get this amount of ink. And this amount of ink within a month will be giving you out this profit, 34 point something ink. This is going to be your profit. And down here, it's further clarification of how you get to this number. But there's a very important disclaimer saying here, staking is an investment in digital asset with no guaranteed returns. The returns, you can't guarantee a return in terms of that it's a business. You are buying an asset. Once you are in an open market, in a capitalist system, then the results cannot be guaranteed. Not in a bad way, but to make sure that people actually understand that this is investment in assets. So the percentage estimates, they change, okay? And that's okay. The moment. The percentages, they change, and it's totally okay, okay? It's totally okay that the percentages change. And you will see here that um, local currency convention are estimates and all that. But once you look here, the most important thing is to know, I said staking only works long term, right? Because if you do staking for 36 months of your assets, then after 2 years, the profit that you have made is bigger than the amount that you have staked. Okay? The profits that you have made is bigger than the assets that you have staked. So it means that you have already broken even. So the rest from the third year, it's profit. And the good thing is that these assets, once the contract is over, they are returned to you. So that's how the business actually works. So if there's any question to this point, ladies and gentlemen, I think this is the best time. And you can go ahead into the box chat and type 444. And you can head over to the box chat and type 444 if there are questions. If there are questions, just go to the box chat and type 444 if everything was understood. And if you have a question, then this is the best time to ask your question. Okay, let me see. If we have any question, this is the best time for you to ask your question. Any question so far? Any question? Any question? Any question so far? But if everything was understood, just go to your box chat and type 444. If everything was understood, just head over to your box chat and type 444. Mm, Okay, we have a question on TikTok. I'll read it for the sake of everyone on the session. They're asking, what blockchain is Ink built on? What is the purpose of staking Ink? Is it to secure the network? Okay. The answer of the first question is Ink is built on the Binance Smart Chain, BIP20. And the purpose of staking Ink is not to secure the blockchain because people usually, mix up the two things. There's DeFi staking and there's proof of staking in POS, proof of stake. The POS is the one that you actually secure a network because you will lock the native asset of that specific blockchain. So if it's this blockchain that we're using, then they lock the BNB token. Okay. But the staking that we do, it's DeFi staking. It's staking that is there as a tokenomics mechanism, meaning that it first of all limits the amount or the number of tokens that are distributed, okay? I mean, are in circulation because the staked tokens are usually locked. So the number of coins in circulation is reduced. And now the staking is also used as a validation or a performance of when they are bringing new coins into circulation, then only those people who have done staking are the ones that are eligible to get the new coins. So the staking that we are doing is not to secure the blockchain, rather it's a DeFi mechanism of controlling the supply of tokens. So the rewards that you get in Encryptus, and this is something that so many people confuse, the rewards that we get in Encryptus, they come from new coins coming into supply. It's not from validation of transactions. That's another thing. So that's the answer. If there's any question, if there is none, then we can call it a day and end today's session. Hopefully you all had a good time and we are going to keep on learning together. Just as a reminder, we have two things, two very important things. We have these sessions on Tuesday from 8 p.m. to 9 p.m. Swahili session. And on Thursday, like today, it's English session. So if you don't like English, you can attend the Swahili sessions. And also we have the event that we are currently promoting, the Blockchain Gala, that is ahead of us. And it's going to be a very massive event here in Dar es Salaam, the first of its kind. And what we are trying to do is actually have a community that is benefiting from cryptocurrencies so that it's easier for other people to get in with the right approach. Because if there are many people who are involved in knowing the reality of cryptocurrencies, because I believe if you have been in the session from the beginning to now, you understand blockchain is not a stamp of legitimacy, cryptocurrencies are just programmable assets. Then you will not be blinded by words like, this project is built on blockchain, so it's secure. No, those words are not going to work for you. So we have the blockchain gala. Just search the Tanzanian blockchain gala on Google, and it'll take you to a page of www.blockchaingala.com, and you can see what we have prepared. And we have made it very, very fair to the point that the entrance is just $80, the minimum entrance, which is around 200K Tanzanian shillings, and it will be held on Dar es Salaam on the 20th. So we have the tickets are just $80. $80. 200,000 Tanzanian shillings. An amount that I believe if you attend that session, the kind of people that you will meet in that environment are people who are going to change your perspective of both the crypto environment and also investing. So without taking any much of your time, thank you for having me. I would like to thank you for your time and I wish you a very, very good night. May God bless you all and have a blessed, blessed good night.